Good morning, investors. Hopefully you guys are doing well out there. Time to take a look at Adobe, ticker symbol ADBE. This company reported earnings this morning for the fourth quarter and the full year. We're going to jump into them. We'll talk about the buyback program that they initiated after reporting earnings. And then finally, we'll jump into the financials as well. Take a look at the most recent quarter here. And then they give us some year-end stats as well, since it was their fourth quarter. And then finally, we'll jump over the stock chart. Some interesting stuff going on here. We see initially the stock's kind of bounced around. It was kind of negative. Basically, it's been flat since announcing earnings this morning. We see here that it came in a pretty good, strong full year guidance, announced a $15 billion buyback program. Now, this comes on top of an $8 billion buyback program, which is expected to be exhausted sometime in the first half of next year. So you got an $8 billion buyback program that's being exhausted, and then you got another $15 billion on top of that. We'll see what happens to Adobe shares, but management is buying them up. So let's jump into the valuation, since Adobe is going to be doing a buyback of their shares. Take a look at the valuation from a price to sales basis. Obviously, earnings can be manipulated, things like that, but sales cannot. And so I typically gravitate towards that when I look at a traditional valuation metric. And in this case, Adobe's trading at a relatively hefty premium based on a 5-year average. 5-year average, I don't have it up here, but it's much closer to 15, between 10 and 15. You see here, we're actually at about 18 times sales on Adobe. So it's relatively expensive from a sales perspective. When we jump over the numbers, we'll see if it's growing fast enough to kind of justify that type of multiple. So we've got the statement of income here. We've got 3 months ended here, 19 over 20, and we've got our year ended here. This was their fourth quarter. Got November and November of this year. So we get a year-over-year view and kind of a quarter-over-quarter view as well. We've got their subscription revenue, which is the bulk of their revenue, their Creative Cloud, things like that. I am certainly a subscriber of that. Certainly, probably many of you watching as well have probably experienced it as well. We see we went from about 2.58 billion in revenue there up to 3.1. We see for the full year, we went from 9.6 up to 11.6. If you annualize out this 3 billion, you're up over north of 12 billion. So they're on a pace next year to even, surpass how they did this year. Obviously, you'd be expecting that with a company like this. Their product revenue, relatively minor and declining, and service and other also a relatively minor part of the business. We get a total revenue figure here of about $3.4 billion. That's up from the previous quarter where we did the previous period where we did about 3 billion. For the full year, we went from 11.1 billion up to we'll call that $12.9 billion. So again, solid growth, and they're on pace next year. Again, give them credit for this quarter 4 times, and they're exceeding their last year. Obviously, we'd expect them to continue to grow quarter over quarter heading into next year. Now, cost of revenue, this is one of the most high margin business that we analyze here on the channel. You see here, they spent $283 on the subscription side to make $3.1 billion. You see here, they spent $1.1 billion to make $11.6 billion. Just absolutely phenomenal margins. Total cost of revenue comes in at a measly $428 million. They spent $428 million to make $3.4 billion. Tell you what, even if these numbers were as written and you spent $428 to make $3,424, you actually probably could live off that, depending on where, maybe not out here in California, but in other parts of the United States, you probably could survive very comfortably on income like that from a business. That leaves us with a gross profit of nearly $3 billion. It's just unbelievable. Here for the full year, we did 12.8 and we grossed out 11.1. That leaves so much meat on the bone for these operating expenses, because as you know, as we go through these, that's not the full story. So we've got research and development, we've got some selling and marketing, we've got some general administration, and some amortization of intangibles, but it's a relatively small number. So research and development came in a little higher, sales and marketing came in a little higher, And general administrative, relatively a little bit higher as well. Again, you'd expect this with revenues growing. Our total operating expenses went from 1.57 up to call that about 1.8. So again, not that bad considering, again, we grossed out 2.9, basically 3. For the full year, we spent on our operating 6.9 billion. Again, we grossed out 11.1. That's going to lead operating income absolutely phenomenal. For the quarter, we were at over $1 billion run rate, which is something relatively new. As you see, last year we were at 970, so kind of a tipping point there. We've tipped over it. Now we're at $1.2 billion run rate. For the quarter, for the full year, we came in at $4.2 billion. My guess is sometimes next year, this company will probably eclipse the $5 billion operating income run rate on that type of thing. So we come down here to net income, just phenomenal net income. And again, you want to take in mind, they just authorized a $15 billion buyback. This is a company that did $4.2 billion in operating income in a full year. So this is basically like 3 times their operating income, what they've authorized to buy back the shares. My guess is it will be very tangible to the shares going forward. From a cash and cash equivalents, it looks like they're going to be not adding a lot of cash to this balance sheet because they're going to exhaust that through the buyback. Because you see here, cash and cash equivalents here was back in November of last year. Here's November of this year. Went from 2.6 up to 4.5, call it. We've got other short-term investments here at about 1.5 blended together. This is 5. We'll call that about $6 billion. Okay, again, they just authorized and they have a little bit left on an $8 billion buyback. Then they just authorized another $15 billion. So a lot of their free cash is going to not going to flow to the balance sheet, but it's going to go to buying back shares. You see here, no debt, at least from a current perspective. It got paid off, or it looks like to me it got rolled over into long-term debt. So we have long-term debt here. It went from 989 up to 4.1 billion. You see here our short-term got extinguished from 3.1 to 0. My guess is that they rolled it over into a longer-term debt. Given where interest rates are, that is an incredibly smart thing to do, in my opinion, for most companies and even for some individuals out there. So everything looking great here. They could pay their debt off with the cash on the balance sheet. I wouldn't say this balance sheet is pristine, considering that they just issued, again, a $15 billion buyback. They have about $6 billion in cash. They've got in total liabilities about $11 billion. In terms of current, they have 5.5. Wouldn't call this a pristine balance sheet, but nothing to be scared of, because cash flows and just in general, this company is very healthy from a margin perspective, which we just went over. From a cash flow perspective, went from 1.3 billion up to 1.7 billion dollars. Stock-based compensation coming in at 233 million. You see is about the same year over year. All things being considered, things about the same here from a cash flow perspective. All things being equal, cash flows look good. Balance sheet looks, I would say, pretty good. I would give them, if I was giving the letter grade, I'd say the balance sheet is probably a B-. I would say cash flows are an A. And obviously, when we come up here and look at these gross margins and operating income, this is an A++. Let's jump over to the stock chart. Again, this thing has traded off a little bit. It's basically flat after announcing earnings. I drew in these longer term trend lines. I think the key one is up here. We'll just call this 500. I have it marked out at 498, but we can just round it up to 500 and make it easy for us. We see here every time this stock, and this dates back to August here, every time this stock has ticked up over this $500 mark, it has gotten rejected, and it just did that recently here in just the last couple days, but it has found its footing rather quickly. Right down in here in this range, you could probably drop this bar if you wanted to widen out this range. Down here at about 460, in my opinion, wouldn't be a terrible spot to buy this stock. Now there's a secondary level underneath this. If we got broader, say we got broader market sell-offs for whatever reason, I could see this stock trading down into the lower ends of these range, which is about 430, 435. Inside this box, 430 up to 460, 450, 460 would be an excellent spot if you wanted to acquire shares of Adobe, because obviously the stock has bounced back at this time. Now, closer to 500, the stock has sold off. It's in a tight range here. So typically what happens is when stocks consolidate like this, you're basically getting kind of an equal number of sellers and buyers. Well, at some point, one of them exhausts themselves. Either the sellers kind of exhaust themselves or the buyers exhaust themselves, and the stock wants to go one way or another in a rather hard manner. So Adobe executing a buyback, I would expect them to step in anytime this stock has a pretty rapid sell-off. They would step in with that buyback. Although, as we saw on the balance sheet, it's not like they have unlimited funds. It's not like a Microsoft or an Apple where they just have this unlimited amount of cash on the balance sheet. Adobe would have to inch into that buyback over several years. And so we'll see what happens. I wouldn't necessarily be running out to buy this stock. Again, we're at near the top of a range where the stock has gotten rejected several times. Now, if it peeks its head up over this $500, as we've seen with Google and maybe a handful and Tesla recently, well, that'd be incredibly bullish if it can continue that momentum. Although you would have expected that momentum to hit during the earnings release. Since the earning release didn't create that momentum, now you're going to rely on something like stimulus or a vaccine or something like that to kind of catapult Adobe forward and likely the rest of the market forward. Because Adobe couldn't do it themselves, I would actually expect this stock to come back down. Anywhere in this 460 range is probably where I'd first want to step in, and this is a stock I'd want to step into because, as we talked about on the financials, these margins are just phenomenal and they're going to continue. Couple that with a strong buyback and strong management and strong controls on the cost structure here at Adobe. This is a very, very strong stock, although it is priced relatively high in comparison to where it's traded at before. So that's Adobe for you. Hopefully you guys enjoyed this one. We'll be back again with more videos the rest of the week. Hopefully you guys have a great day. Good luck with your investments.